Right, good afternoon. Welcome to the Educate to Trade YouTube channel. It is Tuesday, 29th of November, not far from month end. You know, we like some trades on month end. So yeah, do keep your eye out for the closes tomorrow night on the FTSE and in the US indices. And similarly, Thursday morning, we won't be back with you until Thursday afternoon. So Thursday morning, we got month beginning, often a little bit of buying at that time as the funds step in. Whether we'll get so much of it in December, we shall see. But let's have a little chat through what we've got up ahead. Or first of all, what we've had already today. It's been quite a busy day. Even before I was awake this morning, we had some pretty decent volatility in China. If we look over to the Hang Seng, this reflects that quite well. Decent moves up on the Hang Seng today. Even when we got into the office, it was still had further legs. The index that's performed the best so far to date. So yeah, pretty nice price action on the Hang Seng. Rumors that the easing of the Chinese lockdowns will come through, but then there's a little bit of doubt on exactly how that will follow. But there is creating a little bit of volatility, as you would expect, in the Hang Seng and in the Yuan. So yeah, decent start to the day for those of you trading in Asia, I'm sure. The news that we've had through since then, we had German consumer, that's the consumer confidence is out later in the US. The German inflation data, the CPIs will roll out. So this, just for those of you who've been kind of expecting this to all come through at 1 o'clock and see a big reaction, the Germany preliminary CPI was out at 1 o'clock, but we also have a raft of the smaller regions of Germany out. Prior to that, we had one out at 5:30, a handful out at 9, another one at 10. So a lot of this is often kind of buy the rumor, sell the fact. So just be careful when you're trading the German CPI data. It isn't often as clean and as simple as the US version. Other news, we've had Canadian GDP out. This was in line with forecasts for the month on month, albeit the annualized reading was up slightly. If you have a look here on investing.com, that'll stay a little bit clearer. The GDP annualized was expected in at 1.5%, and we actually got an increase annualized on the quarter on quarter to 2.9%, so slightly better than expected on the Canadian markets there, reflecting, who knows, I mean, they've got quite a lot of exposure to the oil market. Perhaps that is all kind of doing quite well for them at the minute. But yeah, decent news out of the Canadian dollar. And let's have a little look at that chart before we go any further. So having a look at the Australian dollar, I've got a little level here. If we do break this down, I think that there might be a chance for a little bit of a sell-off. If I take you to this chart, the Aussie CAD. In fact, let's have a look at the dollar CAD. The dollar itself has been quite a strong market today. If we just look at the dollar in isolation, we've had quite a rally here. So it's quite hard to look at the underlying relative strength of the Canadian dollar. But say we take something that's been a little bit less aggressive, like the pound, and the Canadian dollar has kind of come off since we had that data out. From 130. So we had an initial pop-up on the news. You can see the volume increased at 130, but we are undoing that, which makes a bit of sense. You'd expect the Canadian dollar to start to garner some strength on that decent quarter-on-quarter number, and we're starting to see that slightly filter through, albeit with a slight liquidity grab for the upside early doors. Let's have a look at the euro as well, because this is one that you'd expect to move on the German numbers at 1 o'clock. And again, this was a big move in the dollar at 10 to 2 on some news, but we've seen some decent volume and volatility kind of kick up really since that 1 o'clock number. It was released slightly early, so we did get that number a little bit earlier in the office. If you were on the scorch there, you would have picked that up. And yeah, the slightly weaker CPI number would suggest that they don't have to be quite as aggressive with their rate increases in Europe, and this is why we're starting to see a little bit of weakness come through on the euro. So that one's starting to play out a little bit nicer. The data that's coming out next, the one that I'd be focusing on for the remainder of the day really, is the consumer confidence figure out of the US. So we've got a forecast of 100, bang on the number. And yeah, we've had, if you have a look, the investing.com one, we've got a little bit more data on here for you. Let's see if I can put it up. You can see how this has started to wane a little bit at the start of the year, but last couple of months have picked up. Last month gave back a little bit. We have been north of that crucial 100 level, which we haven't seen below really since COVID. And if you scroll back in time a little bit, we haven't seen sub 100 levels really since 2014 for the time until COVID. So that 100 level is quite a crucial one. If we do trade below that, the last reading was 102.5, and the forecast was all the way up at 106. So that was quite a big miss from the data. In fact, the average miss over the last 6 months has been about 2.5. So if you are looking at getting a kind of clear run at this, you might want to get a beat and a number that comes in at maybe 102.5 or higher. And similarly, if it comes in at 97.5 or lower, that should give you some clear air to hopefully get a nice trade. We've got kind of a good news is bad news scenario still pervasive within the indices, but if you want to keep it simple, obviously a higher number for the consumer confidence tends to be pretty good for the dollar. Conversely, that hasn't been reflected too much in the indices. That tends to still, even though you would expect higher consumer confidence, would relate to higher spending. When consumers are confident, they're more likely to go and buy that new iPhone, for example. You would expect that normally in normal markets would be reflecting in higher prices for the likes of Apple as a result. The way things are going in this inflation environment, we are seeing strong data is being responded to very weakly by indices. It's still good news is bad news, and that's because if the consumer is still strong, if the American retail market is still pushing forward, then perhaps the Fed still need to push their rates higher than they currently forecast. And that's why we've started to see we'll have throughout really this year, seeing a kind of good news, bad news scenario for indices. So just be careful with your indices. I'd expect them to be lower if we get a big number. But yeah, if you want to keep it simple, the currency tends to be pretty simple to the upside. Similarly, if you want to trade something else, gold has a clear inverse correlation to the dollar. So that's something that's had a lot of volatility over the past couple of weeks. You might be well placed to have a look at trading that. So yeah, just kind of touching on a little bit of news. We've had UK Business Secretary shout out saying that the UK have confidence that the European gas supply will come through this winter. As we mentioned, the Canadian GDP is flat in October month on month, but that's a 2.9% annualized Q3 expansion. Biden is set to meet with congressional leaders at 10:30 a.m. US time in the White House. So that's 3:30 the UK. So we might see some volatility come through on the back of that. And we've got ECB's DeCoste on the wire say he can't anticipate how much rates need to climb. Spain's core inflation likely to start easing in the spring, and Spain's Q4 GDP likely to be similar to that which we saw in the third quarter. So let me quickly bring you up to, before we kind of get to the open here, normally obviously show you the charts of the four indices, the S&P, the NASDAQ, Wall Street, and then also the US 10-year market, which has been quite a good leader of late, albeit maybe less so over the past week. This is a tool similar to kind of using the ladders, but it kind of puts it more in a visual, almost chart style format. And this can show you the depth. So this is the kind of COB, stands for the current order book. And you can see how many orders are placed at certain prices. You can see here, for example, is 106 at that 3972 price, and that's reflected in this red line here. So there might be some grabs for liquidity, as we often get a decent amount of volatility on the open. I wouldn't be surprised to see one of these red lines perhaps taken out before we maybe move in the right direction. So yeah, we'll perhaps watch this as we get to the open. But just to explain it a little bit further, we have the time and sales on the right here. So if you do start to see some big lot sizes coming through in red, that indicates sales. And if you do see some big lot sizes coming through on the green side, that indicates buys. So that can often give you a little bit of a tell on direction if this is going to be a directional move. My personal view is that we are starting to see a little bit of steam run out of this, what's been quite a nice bear market rally in stocks. Let me bring you to a daily chart, perhaps in the S&P 500. We've had a nice rally up. I'll clean this up for now. Since, yeah, well, this is the CPIs. We're really only where we were at the end of that CPI print last month, or still this month, 3 weeks ago. So anything that's been held since then, it really hasn't been that profitable where we are right now. So it is starting to give that up, and we have some quite, it's not uncommon for these levels to kind of move quite quickly down. That's why I have this kind of trend line in place. If we do break this trend line, this bear market rally may come to a close in the same way that we saw this nice trend line broken, and then we had a real solid continuation to the downside. There are signs that we're getting some weaker news out of Apple, as I mentioned this morning on the Zoom. that we're seeing Apple starting to discount their new iPhone much more quickly than they've ever done before, which suggests that they aren't perhaps selling as many as they're used to. And that perhaps will be reflected in their Q4 earnings, which we'll get into January of next year. We're obviously very keen on trading earnings season. And that'll be one that is always volatile. But it's Apple. I mean, Apple's been holding the stock market up, really. They were the only ones of the kind of fangs that were reporting well last time out. So be interesting to see how they perform. But if this does give way, I've got a little alert set up. You could easily see some big selling come through. Let's toggle back briefly to the book map. Just as we get to the open, we are 5 seconds from the open now. So let's see if we can get a raft of orders. No doubt this will start to get busy imminently. And here's the open as we speak. So a few more sellers than buyers in the first couple of seconds of the session. It's all very early doors. We can see some orders starting to appear now, slightly lower at 65s, at 60s on the futures. Bear in mind we're at 68, so what's that, 3 or 8 ticks lower than where we are now? And this is really the test of this kind of understanding, is seeing where all these bigger areas of buys are in the order book. Are they strong enough to kind of undo the big selling that comes through? And if you start to see some of the order sizes get big, we have 123 lots, 160 lots on the sell side on the S&P. Pretty muted on the big orders so far. You can reduce these order sizes to be getting every single tick. If I put it to 1, for example, you'll see there's a lot coming through. It's very difficult to keep up to date with that, especially on the open. It's quite smart to have slightly larger lot sizes in play, so you can see where the big buyers and big sellers are in the market. So far, it seems to be pretty balanced, not seeing a huge amount of volatility so far on the futures. So typically, the day I show you this is the one where we're not getting one of those liquidity grabs up or down. Early days, we will monitor it and see how these sells come in. So these bubbles as well, these reflect the size of the buys and the sells. Obviously, this reflects a decent buy order. This is a decent sell order. So these kind of aggregate the amount of buying and selling that's coming in. And this one is the cumulative volume delta. And this suggests that recently we've had a lot more selling coming through than buying when you actually aggregate all of the volume that has been traded in the market, not just the large lot sizes, but the small ones as well. As this cumulative volume delta starts to increase to the downside, then that you'd expect that would drag markets a little bit lower. If you do see more bullish sentiment on the cumulative volume, then you probably see things moving in the opposite direction. So very much one to watch as an open. But if we have a look at this in chart form, let's see what's going on this way. But that's probably reflected in these very sheepish moves. We're off 2 ticks on the S&P. Very slow action on that market. The Nasdaq is leading lower, and the Dow, as it often does, tends to move in the opposite direction to the Nasdaq to begin with. How long that can sustain remains to be seen. Often the Nasdaq does lead the market because it has those higher proportion of those stock market leaders, the likes of your Apple and Microsoft, do tend to tell the story. So let's toggle back here. A bit more green on the board on these larger volume sizes, although a nice big hit, 190 lots on the short side of the S&P. But you can see all of these orders below here. There's quite a lot of buying interest, you would have thought, in this region between 65s and 60s. So if these are going to hold today, you're going to be well supported by these levels, I would say. Stops below here may be wise, because if we kind of zoom out a little bit, you can see where the other areas of volume are. We've got one down at 3925, which is a decent 40 ticks away from where we are now. But if we zoom in a little closer, we can kind of clear it up a little bit to see where these orders are. The biggest ones obviously coming in, we've got 290 lots in at that 3960. And this is kind of already providing a little bit of support in the market so far. Curious to see how it responds. If you even look at the shape of this, right, the orders above are a lot lower and thinner than they are below. You've got a lot more in the order book below on the buy side than you do above in the sell side, and that's correlating now to seeing a little bit more green on the screen. And if we toggle through to the charts, all it's reflected in the S&P is a mere 3-tick rally. But this is the sort of thing you want to look for if you are trying to trade or interested in trading ladders or flow. This will give you that sort of insight into it. So if you are looking at doing it, you can get a free trial with it to take a look. But I just thought it would be something interesting to show you guys, having purely looked at charts with you in the past. So we look back to the charts themselves. This is giving us a bit more. We've got a high volume node here actually on the Dow, which we might be hunting for. We've also got the point of control for the week here. So there's a couple of areas of decent volume here on the Dow itself. Given that the Nasdaq hasn't managed to reclaim that, I wouldn't mind having potentially a look on the short side if we get up to that 33874 level, and we'll see if we get there in the short term and see. I'll try and stay on with you for another minute or two to see if we can get there. Yeah, decent move on that first little run there. How far up are we? We're at the best part of 100 ticks on the open on the Dow again. This has been quite common on the Dow the last few days. Yeah, we had this yesterday. If I kind of bring you to a chart on the Dow yesterday, in fact, all the US indices did very similar, but we had some decent moves on the open, and it lasted until about 5 minutes before it was all undone, and we did kind of break down these key volume areas. And it's curious that we're sat right on one and just testing one as we speak now. So we have got to that area and held it after 5 minutes. So yeah, let me leave that with you. I might go and pop that on myself. Good to speak to you, and we'll be back with you on YouTube on Thursday. If you haven't already subscribed, you can do so below. And yeah, we'll be back for members on Zoom in the morning from 7:50. Thanks for joining us.